Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
You are. Oh no. Oh, are we elbows up?
Elbows up. Canada,
All the way.
Since we last talked, it's been a symbol of the resistance of Canada against all this nonsense that's happening in the U.S. And I'd have to say the nickel market, since we last talked, is also elbows up, with the nickel price popping almost $1 a pound, or over $2,000 a ton since we last talked, and finally broken out of that range that we've been in the last 3 months.
Go Canada. Go Canada. I'm loving that Mike elbows up. Some great TikToks out there, and as well, and also quite symbolic for sure. But like the thing that's important for us investors, okay, what has happened? I mean, the last 2 weeks, the nickel price, what's going on?
Yeah, so as I've been saying since the start of the year, we were going to see an ore price squeeze in the first part of the year. Seasonally, we've seen it 2 of the past 3 years, and on right on track. It has come through. We've seen a number of stories around ore tightness in Indonesia. We've seen ore prices tick up each week since Chinese New Year. This week was actually the first time we didn't see Indonesian ore prices tick, but we did see, Philippine ore prices pop $1 a ton, which is about a couple percent. So again, just showing in general that, ore tightness is there. And if you don't have the ore, you can't make the metal. So again, interesting start to the year. My view was we're going to get to $20,000 a ton, at some point later this year. And so, and with a move in the first part, so far so good, and we'll see how things progress from here.
I guess people will be asking about the kind of sustainability of this source. Nice to sort of see this movement. What are we putting it down to? I guess that's what people will be interested in understanding from Yates.
Yeah, so it's twofold. So one is, this is the rainy season in the Philippines. So November through February, Philippine ore production is dropped by half. With the squeeze in the summer last year of Indonesian ore production, that basically reduced stockpiles all through the supply chain. I asserted earlier in the year that Chinese were lying about their port stockpiles, and we've seen things drop. We'll get a new report out today. It'll be interesting to see, how much ore stockpiles have dropped in China, and so that's generating that tightness. The second piece is, we've talked at length as well around, Indonesia, the incentives to, push more value to Indonesians from their finite nickel ore resource. And the other big news this week was the Indonesian government. There's a 10% royalty rate on production of mined ore materials, and that rate is they're proposing to go from up to 14 to 19%, depending on nickel prices, and that additional cost, will end up, going right through the supply chain. And again, just help keep pushing that floor price for nickel up higher and higher.
So in terms of, okay, obviously those costs are going to be borne by someone else, but in terms of what does that actually mean for NPI? What does it mean for producers? What does it mean for downstream products? And I guess the flow of nickel.
Yeah, so there's again, they have 2 levers, right? So the lever that we had talked about before is the ore licensing, right? And the sort of, the way they can basically allow the amount of ore to be produced. They flexed their muscles last summer. They took their foot off the brake at the end of last year, and there's been, a number of reports that they want to kind of keep it flat to this year. And again, we've talked about the financial incentives for Indonesia to, have higher than lower nickel prices in terms of an overall economic impact on current account and balance of payments. The second piece of this is in terms of, revenue for the Indonesian economy. So the thing to remember is, like Tsingshan and the really big NPI plants, when Indonesia created this program, they gave them all, I think 10 and 15 year tax holidays, significant tax incentives to be able to build. So, I mean, again, they got the investment, they got the jobs, which is what they wanted. But, those factories are directly not generating a huge amount of revenue, right? And again, all those money is mostly Chinese companies and goes back, to China. The place where Indonesians make money is, they typically control most of the mining operations. So the ore price in Indonesia is almost more important than the nickel price, the LME nickel price, because that's how Indonesian companies are, that's their revenue. So they saw a double in that last year. we've seen it tick up again this year, which is great. And then again, this royalty rate ensures that, as this economic activity, the economic value that gets generated from mining nickel ore, that revenue will end up in Indonesian government coffers. So, if anything, again, this should just underscore the Indonesian government, realizes they have a finite resource. They want to maximize value for the Indonesian economy from that, and they're going to do whatever it takes to be able to make sure that happens without disrupting the market to any significant extent.
Right, but to the extent that I think tariffs are on most people's lips at the moment, elbows up, that there's going to have to be a reaction from nickel producers elsewhere in the world and stainless steel manufacturers elsewhere in the world to this potential royalty increase in Indonesia, because it's going to create a little bit of confusion for a while, surely, and in terms of buying behaviors, etc. So, and also I think we've talked in the past. I say, and you mentioned it just now. China's influence on this to some degree is 75% beneficial ownership in Indonesia. How's this work for guys like you? How does it benefit you? How do you react? How do the existing producers and steel manufacturers react?
Yeah, so I mean, the way that pretty simply here in terms of the royalty rate, if they're selling ore at $50 and that royalty rate's going to go from an extra 4 to 8 percentage points, you're looking at an extra $2 to $4 per ton to be able to make a ton of nickel from saprolite ore. You generally need, depending on the grade, anywhere from 120 tons and up from there. So you're looking at another basically $250 to $500 a ton of extra costs. So that just took the floor price, where we kind of bounced off 15,000. That's just moved that floor price higher. And so it's not going to have an impact on today's nickel price, but it really signals to the market that that floor price is going to continue to move higher, and the price move that we've seen so far, I haven't seen the actual long short stats, but I wouldn't, there was a pretty sizable net short position, with the move in the ore prices, with the move on royalty rates. If I was a short, I'd be covering those positions. So I think, what we've seen to date is really some short covering. I wouldn't be surprised to see, if that were, we've ended up back at kind of a net neutral position. What remains to be seen now, and again, as we move into March and April, the Philippines ore mines come back on, where we see ore prices move up from here, particularly within Indonesia. So that's the number one number to look at over the next couple months.
Right. Okay. And do you think in terms of China's role, in terms of that price support, that it comes back to the original question about being sustainable, China's role going forward remains important. Obviously, it's a big consumer. What are the other kind of influencers in trying to maintain that kind of stability to the pricing? Because we've seen such erratic behavior the past couple of years. And it's, for the market, it's slightly off-putting.
Yeah, no, for sure. But I think Indonesia is going to manage ore supply so that you don't see the whippy, the whippy kind of price, super whippy price action. They realize that didn't help the cobalt market a few years ago, and they'll work to maintain a reasonable price range, just either verbally and or by managing ore supply. And again, today, they're at 2/3 of global ore supply. They're in that position. They weren't quite there 3 years ago, but I would say they're definitely in that role in today. But the risk is the upside the prices. If the grade's not there, even if they pump out more, it will be interesting to see as we move forward over the next few years, where Indonesian NPI production ends up and where the marginal grades come out.
Okay, and then let's look at one of the other kind of big influences in this space, obviously, LME and their inventory numbers. I mean, where's that at the moment?
Yeah, so one thing we've talked about the last few years is, I referred to a while back as the Great Compression, right? So, the challenge is you had, a lot of nickel production couldn't be delivered to the LME, so you ended up with this big price gap blowing up between other non-LME deliverable materials and the LME price. Over the last year, those numbers have compressed into a certain range, and I think we're going to see sort of one last final compression as there's now significant refining capacity both in Indonesia and China that can take any units and convert them into LME deliverable nickel. So we'll see where the NPI discount ends up settling out. My guess is it'll end up sort of $2,000 to $2,500 a ton, a little below the $3,500 a ton where we are now. Because again, the Chinese tend to basically go to the point where they're losing a little bit of money with something, and so I wouldn't be surprised to see that margins end up squeezing down into that kind of a range.
Okay. And again, just sticking with sort of influencers in the space that I'm in, EV sales, people have had their doubts, but what's the reality?
Oh, I mean, so the two most frustrating things a year ago, if you read the headlines on nickel market, you think nickel prices were at multi-decade lows rather than at twice the price they were during the prior peak, and the whole thing was EV sales are doomed. No one's buying EVs anymore. It was all hype, blah blah blah. And we talked about this at that time. The biggest issue, and Europe, which had been the big driver in the West outside China, we're showing negative sales growth at this time last year. The driver of that was the German government, and Germany is the biggest car market in all of Europe, had removed subsidies for EV sales. So what that does is you have a huge spike in sales in advance of those subsidies being removed, and then you have a big drop off. And so early last year was the big drop off because all those sales got pulled forward. Today, EV sales year to date February up 30% globally. China was up 35%. Europe up 20. Again, the other big thematic last year was that, no one's buying battery electric anymore. It's all hybrids. No one's buying full batteries. Well, in Europe, battery electric vehicles were up 29% and hybrids were only up 2%. So, and now that being said, we're on the other side of this was the down part last year, as opposed to we were on the other side of that pull forward. So, again, I would think right now global sales really are around, 20 to 25%, which again is a very robust number going forward. And, again, it's important for people to, when you see a number, make sure you understand the context of that number. These incentive changes, they have a 2-year impact, right? So again, these Europe EV numbers are still not normalized. You will have to wait until next year, as long as there's no subsidy changes, to really get a true view of what that, underlying sales growth looks like.
Well, I think people are worried about Tesla sales, obviously falling off the cliff as well, but they're actually going up at the moment because there seems to be a spate of fires with a lot of Tesla cars at the moment, and they'll need to be replaced. So that's one way of driving sales. It just amused me to sort of see that kind of reaction. We won't talk about the underlying reasons why. Okay, when just in terms of the kind of regional EV demand differences, you sort of think China's obviously growing at 35%, Europe at 20%, and again, do you think governments are still sort of behind this kind of net zero drive? Because again, we were talking about various conversations with other kind of battery metal companies. They're like, well, governments are trying to reassess their target deadlines. I know we are in the UK. Do you think that's going to have any effect or in a major way?
Oh, I mean, at the end of the day, the government target wasn't really going to drive sales anyways, right? And so target, no target, later target, earlier target, it's consumers who buy cars. And yes, government subsidies can help influence that rate of sales. But at the end of the day, there's an underlying demand for it. And again, in a lot of markets now, those EV subsidies have been really carved back. And so, again, for me, 20% or so was always kind of a quote average healthy growth rate. And I think we'll see that kind of growth rate, through the end of the year. Fundamentally, it's a lot cheaper to plug in your car in at least in North America, than fill it. Well, actually in Europe too, with gasoline prices, it's a lot cheaper to plug it in than fill it up with gas. They're long run a lot cheaper to maintain. So we're gonna keep seeing it happen going forward. And again, all these car companies who are struggling horrible, I won't, a bunch of them all announced record EV sales in February. So can't be too bad.
Okay, look, obviously, I think certainly for Canada Nickel and a lot of the nickel producers, I mean, stainless steel is still the big market there, but EV sales growing. Is there any sort of development, or are you aware of any development around the kind of the use cases? We're talking about hybrids a lot. Still need nickel. The types of cars that these manufacturers are starting to think about producing. Is there any sort of further clarity on that? Will nickel consumption in these cars be increasing, decreasing, staying the same?
Well, you're going to see in North America, because we sell mostly big cars and trucks. Those are going to be all nickel batteries. It's important to remember that of all the battery plants that are under construction right now in North America, there is only one LFP battery plant being built at this point. So at least in North America, you're going to see lots of nickel getting consumed. Globally, luxury car, if you're spending a big chunk of money on a Mercedes or BMW, you're not going to skimp on some range to get a cheaper LFP battery option. And again, from a battery use perspective, nickel's always going to be at this high end. LFP is going to be a big share of the lower to mid size. I think the one real interesting development that is having an impact is, again, nickel makes batteries blow up. You put cobalt and manganese in there to help stabilize the battery. And so when cobalt prices spiked, everybody pushed to 80 to 90% batteries. That's still the case for the main battery. But what we're finding is, they're looking at moving back to 60% nickel battery and running it at a higher voltage, which gives you the, equivalent good energy density that you would get with a pure battery running at a lower voltage. So my understanding is in hybrid cars, that's one of the battery chemistries that's being used for the batteries in those cars. We don't need a particularly long range.
Right. Okay. And I just want to talk briefly, because we got some company news.
Yeah.
But briefly around supply. It seems to be a big topic at the moment with a lot of companies that we're talking to. And there's two things going on here. One is the fact that perhaps companies are going to come up with new ways to actually go about getting funded to move forward into any meaningful ability to construct and produce and drive revenue, right? So the money from retail seems to have dwindled, shall we say. The bankers are struggling with the kind of risk profile for a lot of these companies, as we saw some pretty, over the past couple of years, fairly disastrous build out programs and missing targets on the capex significantly. Alternative financing. We talked last week about Saudi and Saudi Arabia and the Middle East type of money and sovereign money kind of coming into these things. Do you see the kind of financing equation having to evolve and change, like we discussed last week? And do you think the market is going to, or the companies in the public market companies are going to react quickly enough to do something about that, or are we going to hit sort of additional structural deficits as a result of maybe the industry moving too slowly?
No, I mean, the risk is in North American supply, right? We've seen the governments announce a bunch of programs 3 or 4 years ago. I think they were hoping they'd see lots of new mines being built. But where graphite, lithium, nickel prices have been, we've seen very little new supply. But I would say number one, there are end users who need this nickel, in our case, nickel, in this part of the world, and they want to see projects get built and will provide capital, to get them built. Governments want these projects to get built, and again, I would say if there's one key theme to pick up on this, and again, this is not just nickel, but all critical minerals, the governments will throw money, incentives, agree to buy stuff at a fixed price, whatever it takes to see these mines built, so that we're not 100% or 90% plus dependent on Chinese controlled companies for control of these minerals that are fundamental to our economy. It's a national security issue. Governments in the US, it's one of the few things Democrats and Republicans can actually agree on. And so you're going to continue to see new incentives. in Ontario. During the last election, the Ford government announced another $500 million for critical minerals processing plants in Ontario. There's only 4 of us who have anything in the pipeline. One of the 4, Frontier Lithium, they announced $250 million of support, which is the bulk of the capital they need for their project from the Ontario and federal governments. We expect to see, given the proportionally larger scale of what we're proposing, to see significant funding on that front come through in the next little bit here in terms of support for what we're trying to do on the downstream. So the lack of sort of retail support for these stories, is going to slow supply. But for those of us who are able to find the capital to continue to advance these stories, if we can get to the point where the governments and end users are interested and the Middle East is interested, then you've got a good chance to get it across the goal line.
Right. Okay. Lots of other things we can talk about there, but time is not our friend today, so we better bump onto some company news. Should we start with Talon Metals? They made an announcement, didn't they?
Yeah. So, great news for both Talon and I think for Lundin, and again for North American nickel. The Eagle Mine in Michigan is slated to close in the next few years. Talon Metals about 2 years ago picked up a bunch of properties in northern Michigan that were basically once owned by the Ford family a long time ago. Highly prospective for nickel, copper, PGM deposits. They've made some pretty interesting discoveries closer to surface, decent grade, so great to see there. So Lundin signed an earn agreement where they can get up to 70% of the project by agreeing to fund the exploration there. So a big win for Talon. They get to unlock the potential of those deposits without having to dilute their shareholders for their main project in Minnesota, and great news for Lundin that they can potentially find some feed to keep the mill, which is I think less than 15 kilometers away from the boundaries of these properties, to keep that mill going. Now again, permitting mine in the U.S. is always a bit challenging, but Trump wiped out a whole bunch of environmental regulations earlier this week. So if there is a time to be able to actually think about building a new mine, this might be the chance to actually get it done. So good for Lundin and good for Talon in terms of this transaction, though. A definite win-win.
Well, yeah, I think the US is becoming quite the place to be. I think whatever you think of Trump and whatever else he's doing elsewhere, I think as the mining sector should be one of the beneficiaries of some of these weekly, daily actions. Now, you guys, you're busy as well. Not to be outdone. Okay, what's your news?
Yeah, so we've coined them the 3 giants. So our West Reed, which we've talked about extensively before, and our Midlothian deposits, both of those have a target geophysical footprint, larger than Crawford, which is second largest nickel reserve, second largest nickel resource globally. We got the highest grades to date at Man West, up to 0.6%, which was great to see. Some more solid results at Reed. We're getting, hitting what we are expecting to be hitting, and some more, longer, higher grade. Again, all these deposits are typically 0.2 to 0.3% nickel. That's what's in the olivine, unless they've been upgraded by some subsequent event. And so, where typically a lot of our dunite is around 0.25. What's interesting in Midlothian is that, is most of the holes we've drilled to date are grading up to 0.3%. So interesting at that point, the preliminary mineralogy looks good. We just need to, do the met work to make sure we can get the nickel out of the rock. But very, very good news on all that front. And again, underscores, what we're talking about in terms of the potential of the Timmins district. We'll have a total of 9 resources, including Crawford, by mid-year. And we expect between ours and the other deposits in the area, we'll be able to demonstrate very clearly that, we've got the world's largest nickel sulfide endowment in the Timmins camp. In Timmins, the largest nickel sulfide endowment globally. 3 giants. I like it. It's ridiculous. I mean, the scale of this thing is getting kind of crazy, right? Welcome to Nickeltown. Yes, yeah. Exactly. Well, we joked early on that we're going to build an even bigger nickel just outside Timmins to, compete against the big nickel in Sudbury. So it's
I like that.
Coming to reality. So
You do it as a naming exercise. Create your own town.
Yeah.
It'd be quite good. Right. Okay. A couple of others. Charles Resources. They're at PDAC. A little bit of news out of them.
Yeah, we haven't talked about them for a bit, but very good news. So they originally had were going to build a hydromet plant to process their nickel copper PGM material coming out of their operation. Again, people toss out hydromet and nickel, and assume that it works. Again, it's been pretty expensive. There have been cases, Share developed the Share process in the 70s to do it, and there are several plants around the world that do that effectively. Again, just on nickel containing, largely nickel cobalt containing concentrates. When you get into polymetallic nickel, copper, and PGM, the Activox process that Lionor had, didn't really end up working. Norilsk paid $5 billion to pick up that mix of assets back 15 years ago. The Voisey's Bay Hydromet plant, which processes Voisey's Bay concentrate, which is one of the most cleanest, simplest concentrates in the world to process, end up costing $5 billion to build. So anyways, they got the hydromet out of their flow sheet, which is great to see. They're going to produce two concentrates, copper PGM concentrate and a nickel copper PGM concentrate. The only downside to that is once you have a polymetallic nickel copper PGM where you want and need the value from all three materials, you're then playing into the hands of the existing smelters. So your payability terms, are much lower, which they acknowledged in their press release. So again, it will be interesting to see. I think they're planning an update later this year in terms of their study. So it'll be good to see where those land, and again, hopefully with some more reasonable pricing assumptions than $5 a pound nickel and $5 a pound copper, $24,000 a ton nickel. So,
but going back to that old adage, he controls the mill, controls the district, etc. And I guess this be the same with these processors. What levers does the company have? Not necessarily Chalice, but they're going to go through the same negotiation process, presumably. How do they control a kind of a number which they can forecast into the future and not be subject to price hikes by the smelter, etc.?
Yeah, it's tricky. I mean, the good thing is again, if we just talked about Eagle, if that does close down, that's a big source of feed for the two smelters in Sudbury. Sudbury's been struggling to produce feed, in the Sudbury Basin right now. So, there's room if they can get some competition. I mean, it's basically Glencore, Vale, BHP, Jinchuan, and Boliden. BHP shut their smelter down. The thing that would be helpful for them is if BHP does reopen the smelter and they're able to get some of that feed through there. Now, again, they can turn it into matte, but the Kwinana refinery is not really designed to take high copper PGM loads of the kind that are there, but they could at least convert it to matte and then sell that matte to refineries, which gives them a little more optionality, that's there going forward. So,
okay. Well, there we go. Right. With regards to, I think we've got one more. We're going to talk about Thrust Atlantic Nickel, another Arrowite project. What can you tell us?
Yeah. So they got started about a year ago, I think. They've got an ultramafic in Newfoundland, focused primarily on the aurorites. Have been waiting for some Davis tube results. From that, again, FPX, they don't provide you nickel assays. They provide you the Davis tube recoverable, which gives you just the aurorite fraction of what's there. So the good news was second hole they put out had good Davis tube results, similar to FPX, which is around 0.12% nickel. The release unfortunately also explained why that it took so long to get these results, because they published the results from the first hole, which weren't as good, kind of 0.06 to 0.08, which is like half to a third lower than what you saw at FPX. Key thing with this is ultramafic deposits. Everything we've ever drilled is not completely homogeneous. There's variability in terms of the grade. There's variability in terms of the mineralogy and the amount of recoverable nickel that's there. So, you need to do, a bunch of drilling. You need to do a bunch of mineralogy. And what's important for Warite is the grain size. I know this from our work at Dumont and Crawford. FPX showed it in their last technical report where they looked at recovery versus grain size. And so, again, you might have a Warite in there, but if it's too fine, you're not going to be able to recover it. So, again, good to see these results. Good to see, one good hole. But, there's still a lot of drilling, a lot more mineralogy work to go on that one.
Wow, what a week. So we probably covered almost a couple of weeks, but okay, something getting interesting again out there for sure. And are you optimistic for 2025 on nickel?
Oh no, for sure. Again, we've seen the first leg up, right? And again, we think there'll be another sort of squeeze higher through the year as we go through. I think it'd be stupid for the Indonesians not to try and squeeze prices up to the $18,000 to $20,000 a ton range. And so moves year to date are looking promising. Is that we'll track that ore price within Indonesia, because that'll be a real sign of what the ore tightness looks like. Stainless steel numbers today are also good globally, which is still the big demand driver. So far, optimistic for 2025. And for us, with all the tariff news, just means the Canadian dollar is going to be lower, which is helpful for us from an overall project economics perspective.
There we go, sir. Well, I appreciate time. Great update as ever. We will see you next week, sir.
Sounds great.